Good morning, ladies and gentlemen. Happy Thursday to you all. Today we're going to be going over Rivian. We're going to be reviewing, is the company going to zero or the moon, and giving you the bull and the bear case for both. So without further ado, let's get into the video. So the first thing is, when we look at Rivian, with a ticker symbol RIVN, you don't really have a very bullish chart. Ever since the IPO of the company, you've pretty much been selling off, waterfalling down, almost a meme company, but I don't believe in calling companies meme companies that just have IPO'd and only have about a year of trading on them. Obviously, their charts are never going to look the most pretty because it's an IPO. It doesn't have a lot of time to give big investors to get into. Usually you have retail investors getting into this type of company and then big investors coming in later once the company has proven itself. So we have to keep that in mind. However, we also have to keep in mind that the company sold nearly 80% or 90% off from the start of the IPO to the current price, 88% off. So a lot of people are taking haircuts on this company. And as you go down or continue back up, you're definitely going to be at these points of big waterfalls, going to see people trying to get out because you have a big bag holder. However, let's start with the bull case. I always like to do that first. So for all the people that trade Rivian, you don't have a 200 weekly EMA, which if you follow the channel or a subscriber to the channel, you know my opinion of the 200 weekly EMA. If you're below it, you don't trade it. However, it hasn't traded enough for 200 weeks, so you can't really establish it. So that goes out the window. Next, let's take a look at the pattern that is present on the chart. It's clear as day. You are in a descending wedge. That is a bullish pattern. Usually these things break at the 80% to 90% point of the wedge. So probably going around that earnings time frame. So earnings is going to be a very key, crucial event for Rivian, where if you break this wedge upwards, let's take a look at the price target. I'm a little conservative with the way I draw this price target. I like to come to here, and if we break to the upside, so let's say we come down here. Let's say we come down, really get down into this wedge, well, you'd be looking at $30, $40 upside target, which would take out some of this zone that you have here that previously from this big waterfall down. Definitely going to find resistance there because you do have a lot of sellers in this area that are going to be wanting to get out. They've had a lot of pain. They're probably going to take a couple months to get back up here. Something to just to be aware about. I'm not saying Rivian is going there. You have a lot of levels you got to get above, but there is a very dominant bullish pattern in the short term happening. However, there are some things that we have to be cautious about. One, you're below all the moving averages, so you don't have a lot of support to the downside, especially since price has never been here. So it's very easy for price to move down and also for price to move up because there's not a volume structure in this area. So people that are investing in Rivian, my recommendation is I would like to see a volume capitulation on the stock. What do I mean by that? So if people haven't or don't know what volume capitulation is a significant increase in volume. We're maybe starting to see the signs of it here, where you see volume is kind of flat and now we're kind of spiking, secondary spike here. So you have some cases of bullishness there. Volume capitulation is always taken as a bearish case, but it's actually the true bottom of a company because as long as it doesn't go to zero. So if you start seeing that volume capitulation where people that have lost 50, 60% are starting to get out, that's when you really find a good opportunity to buy in. Do I see that present now? No. Where do you see support? Well, for me, it's pretty dang obvious. It's probably at this 1263 area, just naturally going down here. You have a dominant downtrend right now on the company that you haven't been able to break in the very, very short term. So to me, you got to break this dominant downtrend. So if we go all the way down to the apex, let's say, you're looking at $12.50, $12.35 for a good bouncing price off this wedge. Now here's my cautious side. If you break that wedge, well, you confirm this other pattern that we're going to get into the bear case in a second. However, seeing as you're not in the apex of the wedge, usually you get 2-3 bounces on this. So 1, 2, could be your third one here. Now, we all have to wait to see if it's confirmed there, but that'd be an interesting buying point. I say interesting because I personally don't try trading these type of companies. I'm more of a options trader on the big Fortune 500 companies because I need the liquidity. However, if you're someone that's wanting to pick up a Rivian and are looking to get in, maybe that bounce point on the bottom of this wedge, I like to see consolidation there before I necessarily would get in to then confirm the upside for a swing. First target, probably the 50 daily moving average. Secondary target, this area of consolidation here, probably the $19.82, which if you bounce here, came back up, probably hitting that $19, $18 price target. So that'd be an interesting swing opportunity. Let's say you go from 12, well, let's be conservative, 17.5, that's a 42% upside. Definitely something that you could possibly swing. Now, let me get into the bearish case of the company. So if you don't trade harmonics, basically it's a very useful tool. I use it all the time. So you take a Fibonacci extension tool, you draw from the recent sell-off down to its low. That's your A leg. Then your B leg projects upwards to the retracement up that you had. Usually I do like to take a Fibonacci tool just to see if I at least got one leg of the retracement. So we came up about to 38% retracement on this. Therefore, it does validate the A to B pattern. You also have confirmed this pattern now that you have traded below the swing point low here. We took the low out 2 days ago with a big gap. To me, this green candle here is a dead cat bounce just because you really didn't see significant overtaking of this candle. Now, that could be confirmed tomorrow and basically go upward, or we could just keep going lower. Seeing how the momentum is more to the downside, I definitely want to see this wedge touch before I even think about getting in. So what does the A to B pattern complete at? $4.72. This is why I advise caution to get out of this pattern, because when I see a harmonic pattern that's telling me I'm going to break this wedge, these wedges traditionally don't break to the downside. Keyword traditionally. Anything is possible. So therefore, you have to be cautious. You break this wedge, all hell's going to break. Rivian is going to zero. The price target for that, if you broke the wedge, basically, let's just play that out, is you basically draw the line there, breaking down the wedge, you're at -$6, and anywhere along this wedge that you break it here, let's say you broke it tomorrow, it's still $6. So again, if you break a descending wedge of this magnitude downwards, there's definitely a lot of downside. So this is where I advise seeing the confirmation for the bull side. For the bear side, you break this wedge, you're basically going to zero. It's a free short. There you go. There's your bear case. That's why I don't believe this company is going to necessarily have significant upside appreciation, just because I'm seeing, well, one, all you've done in the history of the company is sell off. That's pretty bad to me and bear. Secondly, you have this A to B pattern that I do play these type of patterns. They don't all complete, so fair warning, you could bounce here. I'm giving you both cases here. And then you could go to the upside. Now, if you break this wedge to the upside and retest, that's when I really would like to get in, is on the retest of this wedge, which basically confirms a true breakout, not a fake breakout. And that's where I would expect to find buyers. That's where I would expect to find great price appreciation. Now, what other things are showing me towards the bearish side that I'm more skewed to this company being bearish side and would not invest in it? Well, let's take a look what Algo is telling us. Link down in the description below. So if we just look simply here on the daily, the MACD is trying to pinch together where that's a bullish sign. However, it hasn't crossed yet, so you need to confirm that. Next, oscillation on RSI, kind of sitting in that 50 area on RSI, and oscillation hasn't really bottomed yet. So for me, I want to see this cross over, and I want to see oscillation find a bottom. If I look at the price targets, we're down in the 9s and 0s with the reversal zone nowhere to be found, probably going to bankruptcy with Rivian if you go that route. Next, if you look at the weekly, it's just a hot turd. You basically, RSI is on the selling side, MACD starting to curl towards one another. However, there's separation. That's why I call it a turd and not a complete basket of fire. So you have to see where this goes. If you break this wedge, you're going to the downside. If you start to advance higher and start making this MACD maybe even get into the bullish side on the weekly, I definitely could see Rivian going higher. However, if we look at the totality of the economical situation we're in with higher interest rates, startups are usually not going to be places where people want to invest. Rivian's not a fully developed company. It's new and early to the market in a niche market per se, because the mainstream is necessarily diesel or gasoline powered cars. So I know electric's coming up and coming. I do like the idea of electric cars. However, I really don't care what the company does. I care what the charts are telling me. The charts are telling me is I have several very bearish intonations on the chart, and I have a descending wedge. So I have a conflict of interest here where I see bullishness and I see bearishness. So to me, like I've always advised in the past, wait for confirmation. Wait for the confirmation of the bounce, wait for the confirmation of the break of the wedge if you're bearish, and then play it from there. If I was in Rivian and I'd be taking this massive loss, I really don't know what I would do. If this wedge breaks, then I'd pretty much be cashing out my little investment for the 2% that I have left in it. and just take the loss and write it off on capital gains. That's what I would personally do, not financial advice. So I really have to see what it's going to do because I'm a little torn here. So if you guys wouldn't mind, throw it down in the comment section of where do you think Rivian's going to go, up or down. And if you wouldn't mind, throw a like on the video if you liked it. If you disliked it, throw a comment down below and tell us what you didn't like about the video. We always want to tailor it to our viewers. And if you enjoy this type of content and are interested in more of our videos, I'll have the weekend deep dive link down below for you, as well as the midweek update. Have those two check out. And we'll also link our Lumen video that we recently did. It gained a lot of popularity. So check that out below, just if you're interested. And with that, I thank you very much for watching, and I'll see you tomorrow for a viewer requested ticker Friday.